Alrighty, good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts at Trade the Chain. My name is Nick Mancini, Director of Research, joined by CJ and Monte, Senior Research Analysts at Trade the Chain. And we are here to break down everything going on across crypto, TradeFi, commodities, and everything else that you can name in the financial world. So this is the pre-Labor Day session. So we definitely know people are ready to check out and take a little vacation, but there's been some volatility on the boards today. So there's definitely a lot to discuss. I think the first thing that's worth mentioning top of the hour is the kind of the big news that we got this morning was the core PCE and of course PCE as well. But we do know core PCE is the Fed's preferred inflation metric. That came in as expected at 4.2%, but you have to also realize that 4.1% was the number for the previous month. So we are ticking up, although it was expected. So if you kind of look at the general context, inflation is staying sticky at the current levels, and the Fed may have more work to do. And that's kind of the generally the market's idea right now. Equities didn't move much higher and crypto definitely sold off. That could be due to another reason, but clearly, sticky-ish PCE is having an effect on the bulls, and the bears are licking their chops right now. So tomorrow we have unemployment rates, hourly wages, non-farm payrolls. So if this comes in less than expected, meaning there's less jobs created, then we may see a little bit more wind in the bulls' sails. But if this ends up being more jobs created, that could also be some wind in the bears' sails. So something to watch out for tomorrow morning. We did see some volatility around PCE, and obviously, crypto did what it did. But this is the big data point to watch out tomorrow. Remember, the Fed is data dependent, and this is the core data that they're watching. So if you want to understand what the Fed may or may not do, this is the data for you. So the last piece of news I want to discuss is tomorrow will be multiple spot Bitcoin ETF news. So we'll either get an approval, a deny, or a delay. And I think everybody watching and CJ and Monte will agree with me. Delay is certainly the most likely option. And so that's what people will be looking up for today. And we could possibly attribute the Bitcoin drop today to maybe some insiders front running this news. People do have a tendency to know what's going on before they happen in crypto, unfortunately. So we'll be looking out for that. So I'm actually going to pause here because I want to bring CJ and Monte in just for confirmation. But what do you guys think of tomorrow? Approval, denial, or delay?
Yeah, I mean, it's hard to imagine we don't get some type of delay.
Why would I mean?
Yeah, I'm also with CJ on the fact that we get a delay. And it's crazy because I've heard people putting out some ridiculous numbers of probability, like 95% likelihood that it gets passed. But I think just knowing the SEC and how they operate, expect a delay. That's what I would expect.
Yeah, I personally have a hard time believing that they're going to get what they got from, the Grayscale court case, and then they're just going to immediately, roll over and approve 6 or 7 ETFs. And I find it hard to believe that they're going to approve one of these ETFs and then deny the rest. So I think it's kind of an all or nothing type of idea right now. And yeah, it's definitely something to watch out for. I mean, we could, that estimate of 95%, I don't know where the hell they're getting those numbers from. Could be right, but I would bet that they're probably going to be wrong tomorrow, and the SEC still has a few tricks up their sleeve. So let's go ahead and move into the dollar, because I think this is going to set up a lot about what we talk about for other things. And I know both CJ and Monte were tracking this, but we did talk about the idea earlier on Monday of this deviation and that moving lower, and that move lower would likely help risk assets. And obviously, risk assets did have a fantastic start to the week, or are stalling now, but now we're sitting at this resistance level of 103.6, 103.7 again. But if we kind of zoom out again, we are, sliding back above that bearish trend. So this could be kind of, another deviation underneath the trend. And if we get back above 103.6, then the dollar, I would guess, is probably going to grab that high at 104.4, and then could possibly end up grabbing, this high at 104.6, 104.7. What are you guys thinking? CJ, I know you were tracking this one close, or maybe it was Monty. I apologize. I forget.
Nah, CJ.
I think we're gonna sweep the highs, if I had to guess.
And which high? Are you talking the May high, the 104.6?
Oh yeah, higher? I mean, I was just meaning like the previous high from the past few days.
Oh, okay. So 104.4.
Yeah, I mean, dollar positioning has come down a little bit, but there's still a lot of shorts not giving up within the dollar. So you might see that positioning continue to melt up. And just from sentiment that I've seen, like there was a gold trade we were looking at earlier in the week, and it's just like I thought it had to be closed because of just all of the bullish, or the bearish dollar rhetoric that had been going on the past couple of days. So that's kind of my feelings about how we could continue to go higher, and I think the positioning could somewhat support that, but we'll see.
Yeah, and I agree with you. And on this deviation, I saw a lot of people on Twitter being like, "Dollar's dead, double top, deviation, yada yada yada." And so, and I think the easiest thing to look for, and maybe if you're not an experienced trader, or you're kind of learning maybe short-term movements and stuff like that, the easiest thing to mark out is, okay, so what was the low before it moved higher, right? So where did it kind of like, where did the bearishness get cut and the bullishness really begin? And what you'll notice is it swept that low. And then once it swept that low, it did not go below the low, and it obviously moved higher. So in this, in my opinion, this is what you want to see, but we do have that final battle right now at that 103.6 level to then get back up to the highs like CJ was talking about. But we may see some more chop, may see a little bit of indecision, heading into tomorrow. But, I think unemployment data could also be a great catalyst for this. So, tomorrow, 8:30 a.m., if we have, the unemployment data that we do not want to see, meaning we're creating more jobs than we expect, this could certainly shovel the dollar higher and hurt risk assets in the process. So let's go over Bitcoin really quick before we hit equities. Monty, what chart did you have up? I saw you had something ready. I don't want to step on you. You already had Bitcoin. Okay, perfect.
Yeah, and I got a few things to say about Bitcoin, but one thing that I'll start by saying is that there were a lot of people that saw 2 days ago's candle, this big green candle, and they got nervous. They were afraid that they were missing the move. They're like, "Oh God, it's happening! Bitcoin's going parabolic, and I'm missing the move." And then funding rates went massively positive, and of course, we saw record liquidations, and they got squeezed out. So if you miss this move, do not worry, because now you're getting another shot at it. And like Nick pointed out earlier, this level here of 25.8 has been such a level of strong accumulation. Anytime we've deviated below that level, we've seen strong supply absorption. And I think that's very important to notice. And not only like recently, but you can go back like all the way, basically, like even here, it was acting as a critical level, somewhat to an extent here. But I mean, in general, like this is a highly critical level for Bitcoin. And I think that if we get a bullish engulfing candle, or kind of something maybe perhaps like this, where, we do come down, tag these lows, start swinging back up, I would be looking to buy on a bullish engulfing candle here because you have clearly defined risk. Cut it if it dips, into this zone here. I'd say put it probably below this first wick, your stop loss. So about, 25, 465 or around there. I'd say, you have defined risk, and then to the upside, I think that there's a possibility we break out above this level because once, traders don't always learn from their mistakes. That's evident in the market, but I think that we'll see less longs ape into the market as if we slowly creep up, as opposed to just one big bullish engulfing candle on a news catalyst. So I think it's going to be more of a slow move to the upside, kind of a crawling back up. And I think it's going to be a good buying opportunity. I'm going to add to my bag a little bit if we get a, like I said, bullish engulfing candle here, put the stop here and take profit at above 29K. That's pretty much, my thesis for that. But one thing I did want to just briefly mention is notice the outperformance from ETH, right? Only down 2.39%, where Bitcoin's down 3.37%. And if you look at the ETH BTC chart, just real quick, I think this chart is reaching a level where we need to start preparing for a breakout or breakdown. And, right now it is outperforming. It could come up all the way and tag this level, and still this trend would be intact. But it's been particularly flat. You can see that in the Bollinger Bands as well. So it's like right now, what I'm seeing is just not a lot of volume in ETH right now, which isn't necessarily a bad thing because a lot of the volume is sell pressure that we're seeing in Bitcoin and futures liquidation. So, we're getting close to the end of this wedge. And when that happens, or this descending triangle here, and, when that happens, you oftentimes see a breakdown. If that's the case, then I think we'd see massive underperformance from the alts, pretty significant underperformance from ETH, and then Bitcoin being kind of the bastion of, stability. It would still be going likely down along with ETH, but just to a lesser extent. So just wanted to point that out as well today, because that is a relatively interesting discrepancy. But last thing I'll say, at the same time, that outperformance from ETH is worth noting, because when the market does turn, and it will turn again, once we do get this spot ETF, no matter when it is, or, whatever the next catalyst may be, it's important to take note of what's outperforming. And ETH outperforming Bitcoin during a day of risk-off price action like this is worth noting. And that leads me to believe that ETH will significantly outperform to the upside once we start rallying. So, everything I said for Bitcoin there also rings true for ETH. And I'm going to be looking to buy some more spot ETH as we kind of retrace back to those pre-news levels. So that's my outlook on Bitcoin and ETH, but would love to hear what you guys are thinking as well.
Yeah, no, I think you made all good points. I think that the one thing that I wanted to mention in relation to Bitcoin, well, there's kind of two. And yesterday on the daily crypto update, I mentioned, deviating back into this larger range with this kind of high around 26.7 and this low around 25.6. You could possibly take it down to this low around 25 as well. But we've got this kind of, this is a range here. It's pretty simple to chart this out. You got mid-range, high, low. We're now sitting in the mid-range, and we're deviated back into the range. So I think Monte made a really good point. We could, maybe, dipped it back down, deviate about this, chop a little bit, and then BART again. These are all certainly plausible. But I think something worth watching is open interest. And sometimes this is not an exact science, but occasionally you can also chart open interest in relation to how you are taking trades. And so I'm just going to draw this line. You can see here, we're stuck in a range, right? And so is open interest. So once open interest got, to the top end of the range, it sold off, right? Now it's at the low end of the range. So This again, it's not a perfect science, but if you're expecting this to stay in the range with the low around 25 or 26 right now, depending on what your bias is, this could be an opportunity, kind of to what Monty's words are. If unemployment data doesn't come in poorly, if this is kind of the ETF, delay drop, then maybe we just chop around, maybe throughout the weekend into Labor Day. This probably should be a very low volume weekend, with Labor Day being on Monday. This is kind of the last weekend all the Americans have to drink beer, eat hamburgers before really hitting the desk hard for the rest of the year until Christmas. So you always want to think about context and how many data points can you use that help you check the box of whatever you want to trade. So I'm not saying you should long, and I don't have a long bias right now, because I want to understand what happens with the ETF news tomorrow, because we could get news that we don't expect, or we get whatever we expect, and we'll trade around that when the US session starts. But for kind of macro, and especially what Monty's talking about, looking for that, an engulfing, looking for a nice wick, to start entering, now I think is the time that you can start thinking about it, because open interest is showing you that everything is wiped out yet again. We're kind of more or less reset, and we're hovering around the critical level of 26K, which is also mid-range from the previous range. So this is not a bad setup if you are still a bull into September. So I will say that, but it's not anything I want to take yet. I think it's better to do some short-term trades and then wait for maybe post Labor Day, or if what Monty said presents itself tomorrow, then you enter, you take the weekend off, and you hope that the next week is good. So definitely with it there. And then ETH is it's a very similar story. We're also sitting kind of close to mid-range. We deviated back below. Open interest is more or less reset. So if ETH, if that ETH BTC chart can stay up, I definitely agree with Monty there. Really good, chance of this, potentially running back at least up to the weekly VWAP, or potentially these highs up here. So all good context there. Now, one thing I do want to finish with is equities, because I found it interesting, that we didn't really dump on PCE, and we're more or less kind of right back to where we were when the markets opened today. So what are you guys feeling on equities? Obviously, these have been quite strong compared to crypto. We're still seeing, you can still get great rates, in bonds and treasuries and such. But people are obviously still excited about equities. Now, if we kind of zoom out a little bit, we are, we kind of got this little gap that we'll probably ride up and grab 4,600 or something like that. But are you guys feeling like we're going to grab these highs? Are you guys feeling like we're going to, bust above these highs after Labor Day? I've seen a lot of mixed signals about what September may bring, and September historically not the best month. But right now, I'm not seeing that September is going to be a shitty month from this chart. What do you guys think?
I just wanted to share a statistic.
Oh, go ahead.
And that was, since 1950, the S&P has risen 86% of the time in September, tracking on a median gain of 3.3%. So we'll see if this trend following continues. As of now, though, equities are still strong.
Yeah, if I'm looking let's just kind of bust out the market structure here. We've got higher low, higher low, higher low, higher low, equal low, higher high, and this has not formed a lower high yet. So this is a high that could certainly move higher before moving. So just looking at basic market structure, I'm not seeing anything here that would make me want to short. Now, if we firmly formed a lower high into or after Labor Day, then maybe I'm, trying to short back to these equal lows again. But if I'm just looking at basic market structure, there's nothing about the S&P 500 that makes me bearish at this moment. Are you guys, it seems like CJ is kind of in that camp. What do you think, Monty?
Yeah, I'm right in that camp with you guys as well. And I mean, if you look at the NASDAQ, it's even outperforming ES, which is typical risk on behavior. And I think what you talked about earlier, Nick, in terms of timing and Labor Day, right? So last week we had Jackson Hole. Tom Lee put out the thesis that after Jackson Hole, he thinks that, we'd have a bullish week. That's exactly what we got. Now after Labor Day, we're approaching 52-week highs for the NASDAQ and many of the big name stocks within the NASDAQ. Things like Apple, Amazon, you know, Google, Microsoft, all of them are nearing their 52-week highs. So I think the timing is lining up really well in terms of after Labor Day, people come back from their house in the Hamptons, and they sit down at their desk and start trading. And also, it gets to that point where, if you watch CNBC, if you've been watching it all throughout the year, it's been bearish talk, bearish rhetoric, bearish talk. Same thing with like YouTube rhetoric, like bearish sentiment, bearish sentiment. Same with thing on Twitter. Everyone's talking like negatively. Eventually they need to change their minds to start making money. And I think that could come after Labor Day. That would be the perfect point to switch. We're breaking into new all-time highs. Risk on behaviors here. Time to start making some trades and putting some capital into play. And I think that the timing of the NASDAQ reaching 52-week highs with Labor Day coming up, I think that could be a really nice combination of, capital inflow and risk on price action.
Now, with that being said, just because, what we're talking about right now may contradict kind of what we talked about in the beginning. And, just to add the caveat, risk does not have to move inverse DXY. There's certainly been plenty of periods where they both move in tandem. But with that being said, Monte and CJ, we did kind of open up with DXY looks like it wants to move higher. And that kind of contradicts with equities moving higher, at least as we've seen the relationship today. So, what are kind of some of the things that we're going to be looking for in the context of, do I want to jump into equities more? Do I want to go a little bit more risk on? Do we think that you need the dollar to pare back for that kind of mindset to be valid? And I'm actually at odds with this now, because I could totally see Labor Day, like September 2nd, September 3rd, all of a sudden DXY and risk is moving together. Like that could be some sort of weird trigger. So what do you guys think?
Yeah, no, I certainly think it's possible that they both move up at the same time. And I think what CJ would say is that, if there's enough people shorting it, then it always has the potential to go up. And I think there are a lot of people very bearish dollar, like we talked about at the beginning of the show. Not us in particular, but there are people talking about the dollar retracing and, making, heading back down below that moving average. After, because we've had an extended period of an uptrend. And if you zoom out a little bit, you can see we've had two comparable periods of, extended positive price action in the DXY. And then it was just a sell-off. So, they're using that like technical analysis as a means of saying that, oh, the dollar is going to break down, and they're trying to short it. So I think if people are shorting it and they get squeezed out, we could definitely see a scenario where both the dollar is rising and the NASDAQ is making 52-week highs. So I do think it is possible for both of them to be going up at once, and that would be the reason why.
Yeah, and if anybody in chat or who followed, go ahead, CJ. Sorry.
Yeah, I mean, I was just gonna say to your initial question, Nick, which was like, how do you deal with that conflicting outlook of like putting on two trades with inverse correlations? Typically, I'll just put them on and try not to think too much about it, and hopefully one of them beats the other more than the other one loses, and so you end up making money. So you can think of it kind of like a hedge. Of course, obviously, there's situations where they both go against you, but maybe Monte's situation kind of occurs and they both go up as well. So it's kind of just like a risk mitigation thing, but it can be difficult, like with those conflicting views and just letting the trades play out.
Yeah, that's why I wanted to mention it, because it can mess with your mental when you're getting ready to place a trade. And of course, I don't recommend diving into anything before we get the unemployment data, before we see how the markets react heading into Labor Day. But I do have, a feeling that at least on the equity side of things, we could see some bulls come back, early September, and definitely and bring a little bit of excitement back to the doldrums we've been experiencing. So, well, obviously we won't be live next Monday. We may do a Tuesday show if things are crazy to start the week, but we'll definitely be covering this next Thursday after we see a little bit of market motions, and of course CJ and Monte will be covering everything that they see on their morning show. So before we wrap up, I did see Bob Dietrich wanted to check out Amazon, so let's pull that up. Let's also bring his comment up because he added an interesting data point. Somebody made a $250 million bet on November or on a November Amazon bet. I would assume it's probably a call. Any thoughts on Amazon for that time frame? So actually, we still have some lines up from the last time we charted it, and I would be shocked if I didn't mention that breaking above that line would be considered as bullish because typically above resistance break. So I would say that it's more than likely going to target the recent high at 143, 144, and then obviously if it can get above that high. It's got kind of an equal high dating back to July of 22. But if you can do something like this, then you've got a lot of clear skies, in my opinion, because you'll probably just end up closing this whole area if things go well. So, but I'm not following Amazon's fundamentals or anything like that. This is purely me looking at the technicals, and you can just see low end of the range, mid range, high end of the range, breaks above mid range, should grab high end of the range. If it breaks above the high end of the range, then you'd start targeting, the lines that I'm going to be drawing right now.
Yeah, Monte mentioned this one, I think, earlier today and pointed out its strength. And yeah, I totally agree with your technicals as well, Nick. Like this breakout above the critical level, pretty promising for the Qs at least. Monte, what would you say?
Yeah, 100%. I have a trigger to buy set at 133.75 for Amazon. I think if we start breaking out of that level, and get above 144, like Nick said, it's clear skies ahead. So I do have that order ready to go. And, I don't think you need to buy it now. It's up 2.5% today. Or, yeah, 2.5%. Like, you don't need to buy it right now. But I think you can buy the breakout. And that's a much safer and equally as profitable, potentially, play. So
I'd be curious to know what the strike price is on those calls, because if it's like 160 or something like that, I could see that being very valid. Maybe 170. I'd probably say 150, 160 would probably be a safer bet than a 170.
Yeah, I don't think anyone's buying November 170 calls. That would be
Andy Jassy going to drop he's going to be running servers for the whole globe. 120.
So that's the money.
Interesting. Obviously, I'm not an options expert, so that could make a ton of sense. That seems like that's honestly a little weird, but
yeah, that's a big bet. Obviously that's large. That's largely in the money. They probably had to pay a pretty penny for what was it, 250 million?
250 million, yeah. So. Well, that'll be interesting. That's a good caveat to make. Like 120, I did not expect that number. So they may also be playing a little bit more of an intelligent trade than it may appear as well. That could be, there could be something on the other side of that for a hedge, or he's playing a very, expert option strategy that is lost to many of the average options traders. But maybe that's something that we kind of bring into the TTC community, because I think that'll be interesting to discuss as we look forward into September, October, November. So,
yeah. So they're trading for $22 each. I mean, obviously highly expensive contracts, but when you buy something that in the money, you're capping your ceiling, but you're also mitigating your risk. So, it's a person. It's probably a person that believes Amazon has the potential to break out, but maybe not break out above that top line you have drawn there, Nick. Because if they did, they would more likely buy calls that are closer to the current strike price or the current price, rather than buying calls that with a strike at 120. So it looks like someone may think that Amazon could make a move to the upside, but just not necessarily like a huge one, just a slow and gradual grind up.
Yeah. Well, yeah, we'll definitely have to cover this into September because I do think the Amazon chart looks good. And a lot of like we're seeing Walmart. I think Walmart just made a new high today or is close. What's Walmart's? There we go. Yeah, so Walmart just made a new. I think it looks like an all-time high. So good for Walmart. But also, this just struck me as interesting because consumers, when you're looking forward, when you're expecting recessionary conditions, and we are in recessionary conditions in some way, shape, or form, especially for lower income consumers, is obviously they're going to stop shopping at Target and upscale, shopping places. They're going to start going to your Walmarts and your Dollar Trees and such. So obviously they have an ability to capture volume, but Amazon, I don't know if, I'm sure everybody shops on Amazon to a degree, but the prices are pretty damn competitive. And obviously it's much easier than going to Walmart if you're going to buy batteries or diapers or, the big spend stuff that a lot of families are spending on too. So Amazon could, I'm not going to say they're going to break all-time high like Walmart, but if you're just thinking of, okay, lower income people need to figure out how to get things and also go to 2 or 3 jobs, and manage that kind of lifestyle, then Amazon is certainly something that'll probably take some market share from that. So I thought that was an interesting tidbit that I was noticing as well. So with that being said, we're going to go ahead and wrap things up. CJ, Monte, and I have a very fun Labor Day weekend planned out. So I hope everybody else who's watching and listening does as well. Should be hopefully all the hurricanes and nasty storms are gone from wherever you're at, and should be sunny skies and clear weather for the weekend. So before we leave, do want to let everybody know that you can sign up for Trade the Chain, which is the community and data service that CJ and Monte and I use and are in every single day, dropping insights in the morning, afternoon, evening, trade calls, trade insights, help with whatever you need. If you are a paying member, you can get 14 days free at www.tradethechain.com, risk-free. And we are also sponsored by Didex and BingX. So Didex, if you want decentralized derivatives, own your keys, own your crypto. BingX, if you want a centralized exchange that is a money transmitter license in the US, financial licenses in the EU and Australia, and also won an award 2 years in a row by TradingView for the best broker award. So we're working with some great exchanges and want you guys to have the best venues to trade. And also, again, if you're not in the TTC community, please do come visit us. That's where all of our information, trade insights, trade calls, and all that fun stuff goes. So good luck. Have a great weekend. See everybody next week.